All right. Hey guys, Sam here. Let's see, we're midday on October 19th, and a few good things to take a look at here, maybe a few things to consider as setting up, and maybe a few things that we can learn from the price action over the last 24 hours. So, very good news for Bitcoin bulls. I'm here with there's sort of this reference chart that I've been using. This is the 8-hour on Bitstamp. And yesterday we were, cautiously optimistic, but still considering that we had the potential for this, now currently labeled as a third, to be a top. It's looking much better, as though what we do have here is a 1-2. We've got our third. We put in our fourth on yesterday's swing. I hope some of you caught that. And now we've got some targets up here for a fifth. Now I'm gonna take some of this off just so I can show you this a little bit more clearly. And I've got a few things that I'm using to project here. Now I'm going to go to a 4-hour so we can get a little bit more clarity. All right, let me bring it in just a touch. All right, so here's the extension. So we still maintain the idea that we have our impulsive structure starting here. Here's our third, fourth, and we're in an extension in the fifth. So if that's the case, we're looking for this to subdivide into 5 waves, and we've had just perfect technical trading here, right? This is just as good as it gets, right? So here's right between the 618 and the 65, just as we had it back here. Right, so that's certainly one you want to be watching. Now, if we consider that we're going up to finish this fifth wave, we can start doing some projections as to next targets. So currently, we've worked off of this 2 low here, as I squiggle that so you can see it, that gave us our entry there. So we have our 1 wave, a shallow 2, big third, right? And we went through how we came up with that box up here. So I'm going to take that off now since we don't need it anymore. Since we've had our retracement right to the box that we were hoping to catch, which we got. So now, just basic projections. Well, of course, we're going to have the negative 23.6 from this swing low here. But we also have all the way back from our 4 low. We want to consider the major pivots. So from this low to high, we went to the 38. Right. Take note there. We had this little, larger box would put it like this. So we had the 38 on the prior swing, and then we had the precision of the smaller swing off of the 2 low. So we've got a fairly decent range up here as potential targets. So a couple things. Again, I've taken off the major pitchfork, but if I can get that to highlight, this would certainly be something to draw up and consider on the chart, looking for some structure. So, if we look at when we might get there, that's something to keep in mind. We've got good structure there. So the other thing we would want to do is start projecting for the relationship between the 1 wave and the 5 wave. So I'm just going to take the alternate price projection tool. I'm going to measure my 1 wave, going here to my 1, and I'm projecting from my 4 low. Right, so I've got my 100% here. That's 100% of the length of 1 projected from 4. Okay, so if we're going to stop there, then we would have a double top. Right, now we've seen that before, but likely given where we are here, we've got one more push up. That would be the expectation. So we get some targets up here. We get our little window here of the 1618 to the 175. Okay, that if we blow through this, next stop we've got our 23s. We get through that. Next stop would be up here, which would be coincidentally right in line with the channel, with the outside edge of the channel. So we've got some good targets up here. Now, well, how are we going to get there? So let's go down to our 15-minute that we've been using to time our entries. So yesterday, let me get the oscillators off. Yesterday we had this amazing reaction. So how do you know when we can officially label this as impulsive? Well, of course, the first clue was when we went from swing low to swing high, and we just blew right through. Well, we went to the 786, stalled a little bit, came back, we had a little retracement, now we're to and through. So we can comfortably call this an impulse wave, and in fact we get some subdivision in it. So we get a little 1 to shallow 2, Here's our 3. We come down for a 4. We get decent fib relationship here. So from 2 to 3. Okay, we come right as what would we be expecting for the 4th wave? Well, we'd be expecting it between the 38 and the 50. That's the most common. We come down with just a little shy of the Vegas wave, so you've got really strong indication. Let me take this off so it doesn't confuse the chart. If I can get it highlighted. There we go. Okay, so here's the 4 we were expecting, and then we're hitting just coming shy of the first fib targets up here at the negative 23.6 off of this pull. 2 to 3 down to the 4. Here's the first target. Okay, so if indeed, and we don't know that we have a top there, we'd also want to consider, just as we do every time we get an impulse, we want to look at the relationship between the 1 wave and the 5 wave. So I'm taking the length of 1, projecting from the 4. Now take note here, we get a little overlap here. So this is the negative 23, and then I've got the 618 of the relationship between 1 to 5. So, potentially this is, a likely stall point. Do we stall there? Ultimately, well, we can't say yet, but it's not surprising that we've come a little shy of that. Algos will front run, so that's reasonable. We're also getting up into the zone of that prior range up here that we got to, and then we look at the oscillators and we can see some divergence. So likely we've got, at least at this point, a reasonable location to say, well, that's good probability to be our 1 high. So we've had this impulsive move here. Now we wait for the retracement. So if we're going to retrace the entire thing, what we no longer are pulling from the minor pivots. Now we're going to pull the entire thing. So let me get my tool. Very simple. We've got potentially a completed 5-wave impulse structure. So we're looking for the entire move to retrace, which puts our box down here here's the 50 to the 618. So let me pull some of this off here just to declutter the chart. So since we've got our little box there, then we know that's significant. So if we're going to start to retrace, what are we looking for? Well, ideally we want to see subdivision because we're down here on the 15-minute. So to get more confidence into the kind of structure that we would look for, or the pattern to follow this impulse, we don't want to see just a straight down, right? And so if we come here, I would not buy that because I want to see better subdivision, particularly on this small of a time frame. So the expectation is we get some sort of a 5-wave structure down here into an A wave, 3-wave B. So this could take a little bit of time. Okay, so if we, one of the things that's not a bad idea is just to, look at how much time this took. Look at the number of bars. So it's 94 bars and just shy of 24 hours to make that move. So we don't want this to be, 5-6 bars. We want to give this a little more time and look for a time relationship that gives it some proportion to where it looks. There's kind of a look to it that will make more sense. And we've looked at a couple of examples where it just went down too fast, too quickly, without much subdivision, which gives you the impression that most likely you've just got your A wave in. Right now, if we're looking at a 4-hour, we'd go down to look for more subdivision on a smaller time frame. Since we're sitting here on a 15-minute, I want to see that subdivision, and I know I've got my preferred target down here at the 50. So if I can get something like this, then this is a reload zone. If you're long off of this, then it's reasonable to be taking some profit up here, particularly since you're seeing this. So nothing wrong. That's a $700+ move. Nothing wrong with banking some profit there. Now, of course, if you're going to do that, we may just continue to rip. There's nothing says that we can't. But if you weren't going to take some profit based on the fact that you're hitting, we've got this little box here and we're seeing this divergence among the oscillators, so we're losing strength. Maybe a stop on the other side of the Vegas wave. Just a thought. Really it's just up to the individual. If you're happy with that, then you take it, and then you don't allow for the possibility that you're going to kick yourself if it continues to go higher. You had a nice trade, you take your profit, and then you wait for the next setup. If it keeps going higher, you don't pull out the woulda, shoulda, couldas. You just accept, I made a nice trade. That's Shit, that's more than a single. You know, that's a $700 move. Nice trade. So now we wait for the reload down here. Hopefully we get the structure. And if we do, you know, we'd be, you know, kind of mapping it out, looking for something like this, to look for the geometry, the structure to give us just what we're looking for. No reason to chase, no reason to be impatient. You wait for the setup that you're comfortable with. And, you know, put it this way, that's what I'm going to wait for, right? So for what that's worth. Now let's move over to Ethereum. Now this, you know, again, seems to be following the playbook pretty nicely. We had a couple of stop outs on the first attempts here, but from yesterday's video, hopefully, you know, you've been through that and we get you know how we came to this potentially being our pivot low here. We still have the potential for this to be, if we see it here, we've gone very deep here, but we have not wicked out this low. So potentially we have a very deep 2. We are still internal to this retracement until that low is taken out. So what were we looking for and hoping to see? What we were hoping for is just as we've seen in Bitcoin, some sort of an impulsive structure. Now we may not be complete here because even though I've got that little box there, if we open this up, now I'm on a 1 hour, it's not, let me get a 5-way structure. We don't have great subdivision here. We still have the potential for this to be an ABC. Right, there's my 3, 4, 5. Do you see what I've got here? We have the potential until we take out this high so that we can call this a 4. Right now we have a 3-wave structure, which is corrective, and so we have the possibility that this plays differently than what we're hoping for because of the depth of this. Now take note. All we're still in an internal retracement of that move. Internal. We've gone just shy of the 50 right into the Vegas wave. So that's the boxes here as likely resistance. We've also got the pivot swing here. So we've got some market structure suggesting that we're likely to hit some resistance here. So we cannot rule out the fact that or the possibility that we're just doing an A, B, C here. Can't rule that out. How do we rule that out? Well, we've already overlapped what potentially, if this is not a 1 and it's an A, but if this is our 1, 2, well, we've already overlapped the 1. So best case is that we get a diagonal, and which we know can only be in an A wave or a 1 wave. So that would play that we've got, you know, we need to get this move up here. So of course we're pulling fibs from the opposite direction. Let me get that off, right? So here's our fib from the opposite direction. We've gone a few shy of the 50. Our target's up here at the negative 23. If that plays, then we can comfortably say, okay, I've got a leading diagonal giving me a 1 wave. And then we wait for this, if that's going to come. Just like Bitcoin, we wait for the subdivision that we want to see because we'd be looking for, let me pull it off. So then we'd be pulling, if we go up here, right? So just for the sake of the example, right? I'm going to use the negative 23. If we get up there, we can quantify it as a leading diagonal. We'd pull from here, looking for an ABC down in, you know, where we like an ABC between the 50 and the 618. So we'd look for that subdivision to give us confidence here, knowing that we can enter the market here expecting and looking for the 3rd wave. Right, that's your money-making wave, and we can be, you know, relatively tight on the stop. So depending on where we see the market stall, are we entering at the 50 or are we entering at the 618? So same kind of thing. We're getting what we were hoping to see. It's not quite as good here in Ethereum as we have it in Bitcoin, where we can clearly carve out an impulsive structure. This still potentially, we just got an ABC, right? We got to take out that high. So that's just waiting for more information. Now let's go over to Litecoin. Litecoin similarly. Now here's a good example. Let me take some of this off so I can recreate this for you. So I'm going to take, we know how we got to that box up there, so I can take some of this off. We know the box is up there. I've got this channel here. So now we get an A We get our B, we get a little 3-wave B, and our expectation is we get a complete 3, 4, 5 down. Well, notice what's happened here. So our 4-wave has overlapped the 1, meaning if this is going to complete down here, which is kind of what we'd like to see for the confidence in that buy, that we would have an ending diagonal, right, which can only be found in a 5-wave or a C wave. So we get 1, 2, 3, deep 4. Now that's a big long wick that was rejected quickly, but it does violate the one low high here. Meaning, if this is going to go down, it can only be a diagonal. We're expecting a shorter 5, not a deeper 5. So this would be a box that we'd be looking for for a couple of swing relationships. So if I just take my standard from my 2 to my 3, well, note we've gone to and through the 618. So unlikely that that's a 4 here off of that. But we got to check all the swings. You got to check the major swings. So note what happens here. When I go back to my B wave and I go low to high, I go right in between the 618 and the 65. So we can't ignore that. That's significant. So thus the box drawn right there, which we go right to it. So potentially we would then just kind of carve out this as a 4, put a channel on it, and we can see that lines up nicely. So if Bitcoin is going to go down for its second wave, that may well pull Litecoin with it. So they tend to trade in harmony. And if we see this, we may have a 1, 2, we'd be going into a 3, 4, 5. We'd be looking for some 5-wave subdivision to finish this 5th. So definitely not a buy here. I would not be a buyer here myself. Let me rephrase. I would not buy it here, even though you can make the case. Let me pull some of this off here to try and clarify this chart. I know it gets to be messy, so I'm going to take that off. And if we look at this, we'd want to look for, you would want to draw it to see what kind of reaction you get. So that's the support challenge on the way down. So if we're going to get here, we want to see the market comfortably blow through that 61865, because here we could just go 65 to 65. If the market gets stuck in a range, you'll often see that. So we need to see good impulsive structure. You can see that we have the potential for a 1-2 here because we have not overlapped this high. So we may have a 1-2. What are we looking for in the 3? Right? We can take this down even if we went down to a 15-minute. We can get a little more clarity on it. It's kind of a sloppy one. It's unclear, right? So one thing I always tell people, when in doubt, stay out. Don't guess. Wait for the clarity where you can see it with conviction. If you're unsure, wait for more information. As I like to remind you, you're not going to miss anything. You might miss a portion of the swing, but if you get substantial movement, all it's giving you is more clarification as to what's happening. So this isn't the prettiest 1-2, but it potentially could be there. If we're going to go in a diagonal, we expect 3s, so we could have a 1-2. So, if you look at it, that's going to be a deep 2. Right to the 786, lines up with the channel. So this potentially is there. We'd want to look for the alternate tool to go for, that's our 1, this is our 2. Well, we at least have to go 100%. That's down here. Which, coincidentally, we're right here in line with the 618 and the 65. So we got to get through, and then there's the negative 23. So this is going to be a potential support zone that if this is going to finish, we need to see it get through this. And then here would be our ideal buy would be down here where we have good confidence that we've completed this diagonal pattern. And we can be a buyer down here. So we've got the 618, the negative 1618 and the 2618 down here, and the structure of the channel. So this is I wouldn't be a buyer here. I'd be waiting for this. If this does do something that I'm not anticipating, if we come down here and then we just rock it off, well then we reevaluate. Maybe we've got enough completion here that we could look at this and say, well, you know, maybe we end up with maybe we can carve out a very small 1, 2, 3, 4, 5. That's potentially, that could play. And then we're putting in an A wave, a B wave, and a C wave. So we've got you know, that's the thing with Elliott trading. These are only potential roadmaps. You're going to change them more often than not. And if you see this respond here and react, there's potential that we're relabeling, which would end up this being A, B, then we get a 1, 2. We finish out the 3, 4, 5, completes the C. That's a contender, and that we've got our 1 wave, and we're putting in our 2 wave. So those are all possibilities. So we can base it off of what we see happen, you know, should we get down to this level. And, you know, first thing we got to do is get through the 50. So if we get down here and this responds, then we can say, okay, well, what do we have? Well, then we would have, this would be our 1, 2, 3, 4, 5. You see it? Let me put the wave on it so you can get clear on that. If we come down here and stall and we get a reaction and we start to go impulsive and you say, oh shit, I missed that. Listen, man, you know, the third wave is going to subdivide, right? So there's always opportunity. All it's doing is giving you more clarity as to what is the more likely roadmap. Right now we have 2 contenders. And we can't eliminate either. If this starts, well then of course we're going to do this. Right? Let me put that in a different color and put it a slightly different degree. That's the next opportunity. So if this is going to go into a third, well, you got opportunity at the, you know, if we see some, you know, this starts to look impulsive. So we get 5 wave subdivision into the 1. Well, that gives us confidence that we've got our low in here and this low is complete. This, instead of being a 4, becomes a 1. This becomes our 2. Then we're looking for the 1, 2. If you're not sure, if it's still unclear, which it could be as we sit in this channel, it breaks here, well, then you trade the 4, right? And then you trade the 4 for the 5. And if we stall up here at likely targets, then you wait for the 4, right? Look how nicely that would play. Here would be our 1 high. Here's our 4 low. I mean, there's just, you don't worry about missing something. Wait until you can be confident and pull the trigger, knowing that you've got low risk and you've got great upside reward. It's again, you're going to see me do this over and over again. It's the same process. In fact, the point is to where you've watched this so many times that you're bored by it, because you know if I bring up a chart, you know exactly how I'm going to analyze it. And you're reaching the point where you can go, oh, I got this. I see it. Now, that takes time, right? Now, a lot of this, you know, I understand. I've been doing this for 20 years, so some of this just comes easily to me. Well, it's not that it comes easily to me. I've just seen so much. It's a lot of screen time. So I know that I've got 2 potential roadmaps here, and I can't be sure about which one is going to dominate here, which one wins out. So when that's the case, if I see something I like, I'm willing to take a small bite at it. So this is tradable down here. It's tradable down here. If I get stopped out, I know it's going to be a very small loser. It's not going to hurt me. And if this starts to react, well, okay, I got multiple opportunities to get well. If this is going to turn from a 4 to a 1, I got this one, I got this one, I got this one. I got lots of opportunities to get well. And each one of them with small risk, right? So because I can quantify, because I know when am I wrong? When am I wrong? Right? I can be absolutely deliberate and say, well, if I'm going to enter here, I'm making the assumption that this is a hard pivot. If that pivot is violated, then my roadmap is wrong. And I don't have to ride this down because I'm a long-term bull. There's no reason to do that, because this, right, we have the potential 5 down here. So if I'm entering here, why on earth would I take my stop all the way down here? Why would I take all that heat? Right? There's just no reason to do that. Tight stops. Tight stops are the keys. I'd rather get stopped out 4 times in a row and then finally catch it on the right move. That will well compensate you for the small losers. When in doubt, don't be in or be out. When you see what's happening and you have confidence in it, now you're looking for the next opportunity to add. Right? Does it make sense? Okay, how am I doing on time? Okay, there's 24. I'm going to wrap on that so that these don't go too long, and I'll split it up and do another one shortly here. There's a few other things I can show you across some of the other majors. Okay, guys, back to you shortly.